Good morning, traders. Today is October 1st. It's a Friday, and it's going to be a good one. So buckle up, batten down the hatches, weigh the anchors, as Ronald says, and let's set sail on what shall be, hopefully, a very interesting day in the market. Okay, so I wanted to start it by taking a step back and looking at the daily chart today. And a couple things that jumped out at me right away this morning when I opened up the daily chart. Obviously, we're back below that 100 daily moving average, which is bearish. Okay, closing below that yesterday was bearish and led to a massive sell-off in the overnight market. Okay, it also reminds me that this looks like a dead cat bounce here. The dead cat bounce implies that this was not a big enough pullback to bring in the necessary buyers. So we're likely to need a larger pullback in order to do that. To my mind, again, just looking at the daily chart here, that becomes this low from the 19th over here, okay? It becomes the next major support. Coincidentally, that was also a poor low that we left behind in need of repair. Now, the levels are a little bit different depending on which contract you're looking at. The way I've got it marked on my market profile chart is from the previous, contract, and it's a little bit higher than it is here on the combined. But that low should act as the next major support. If that can't hold, and that doesn't mean we're going to have to break this today, but I'm just talking about in the future. If that doesn't hold, the next target becomes the 200 daily moving average. And I know what you're thinking, Charles, the 200? We're never, ever, ever going to go down there. Look how far away that is. Well, let's just scroll back in history and see that when the 100 breaks, we often visit the 200, okay? When the 100 breaks, we visit the 200. When the 100 breaks, we visit the 200. Okay, now these are massive sell-offs that we're looking at here. This is COVID. These are big, that one's COVID. These are big sell-offs, but, let's step back and just take a look at the monthly chart. This is a lot of excess in need of balance. A pullback here wouldn't be anything in the monthly chart, right? A pullback down to these levels down here, even down to here, would not be that major. So today is going to be a big day because there's really, of course, there's always three options. The market could move up, down, or sideways, right? But today doesn't seem like it's going to be a sideways day to me. It's either going to be the sell-off continues with a vengeance, or the market buys the dip and pushes higher. Now, that brings me to my next point, which is that the overnight traders, they saw this as bearish, and they pushed the market down all night long. And it has only been, let me just expand out this profile. It has only been in the last hour and a half that the market, it balanced down here at lower levels all night long, and it's only been in the last hour and a half that they pushed it back up into yesterday's range. That is very suspect to me. Now, again, this is just me guessing. I'm just speculating here. I have no idea. But that could mean that the bigger players have come in this morning intentionally pushing the market higher back into yesterday's range in order to get the FOMO buyers, the buy the dip crowd, the stonks only go up crowd, to buy in this morning up here at these larger prices so that they can then tank the market the rest of the day. So I'm very wary of how and when this push higher happened for that potential right there. Okay, that they love to do that. They love to get retail to step in and go long so that they can short against it all day long and make some monies. So looking at the market profile, what are the important nuances to take in this morning? Well, yesterday's value is lower. Okay, so that is a sign of a potential new trend down forming. Okay, our low for yesterday was almost exactly at the previous low, the previous pullback low. So that's a little bit weak. It's not technically a poor low, but it's just a little bit weak that we popped down to that exact level. Our POC is right there from yesterday at that 100 daily moving average. All right, the market is open. So we're opening inside the previous day's range, which increases the odds of chop this morning. So resistance to the upside is going to be that 100 daily moving average. That'll be the first resistance we have to work our way through. If we get through it, the next target would be repairing this weak M period high that we left behind yesterday. Oh, sorry about the bottom of the screen. I was running late getting ready this morning. There you go. So let's just watch the chop and let's see what they do with it. Now, if they do get above this 100 daily moving average and they come back down and then they find support in here where the POC was from yesterday, that is a good long trade for continuation, but I would have very tight stops. Okay. But that could be a buy the dip type of thing where we're going to continue higher. I feel like I can hear something in the background.
From reality. And anyone who would say that.
I have no idea where that voice is coming from. That's very eerie.
Made you a natural pick for the Treasury Department. I'm glad you understand. So that's why I'm sorry we're in such a bad situation. That strategy, from a Democrat-run Washington,
Okay, so the sell-off has begun. Again, we're expecting chop early in the morning here. So the support to the downside is going to be the bottom of this node right here at about 43.09. Guys, I am tripping out right now. My computer is like playing some sort of broadcast, and I have no idea where it's coming from. What app it's coming from. Very strange. That is so strange, and I can't deal with it while I'm streaming. Okay, well, there's just a random voice in the background. There's something happening here. Okay, so where would I place, Donkey's asking, where would I place the spike for yesterday? That's a good question. I would put it right at probably where the G period low was. Yeah, so that would be the base of the spike down. And that basically just tells us if we open above that spike, that is the least bearish scenario. But again, I feel like there might have been some market manipulation here in the early hours. They love to do that. They love to push the market up just to trick retail into going long. So that they can get a better entry for their shorts earlier on in the day. Looks like both markets are finding resistance at their 20 moving average on the 15-minute candles. The internals opened bullish with that big push higher we had this morning, but got to give them a chance to settle in. So, Charles, what's the major level to the downside that would have you going short for continuation? I'd be looking at right here. This node of volume is interesting to me, just below the base of that spike down. So if we can push down below that, come back up and find some resistance in there, that would be short for continuation to the downside. Looking for support at yesterday's low. If that fails, I think this thing's going to start falling pretty far. We've got, as far as support goes, to the downside, we got the low from 720 at 42.52.75, and then the next is the repair of that poor low from 719, which I showed on the daily. This should most certainly act as support. I don't know that we get all the way down there today, but once we repair that, there should be a lot of buyers waiting down there. Sellers are stepping up to the plate here. All right. Good morning, Arcaleon. Good to see you. Chris, good to see you. Cine Matt is back with us. Good morning, my friend. Amir is here. Good to see you. Mangala, good morning. Ronald, we weighed that anchor. We weighed it, and we're ready to go. Donkey asks, what do you think the open's going to look like? Just grab the dragon's tail and hold on for dear life. Yeah, pretty much. I mean, obviously, there's always the chance we just rotate at lower prices, but to me, the market's going to pick a direction. They're going to buy the dip, and they're going to push higher, or we've got a long way to go to the downside to bring in those bigger, stronger hands buyers. Okay, so now I'm looking for resistance right around this area that we just fell into here, which to me would be sellable for continuation at the very least down to yesterday's low, and then monitoring for continuation lower from there. Ronald asks, which end is the tail? Well, we like to look at value. Value is a great indicator of what's happening bigger picture. And yesterday, value was completely lower than the previous day. So if the market's likely to pick a direction, it's probably down. So far today, value is overlapping to lower, which is down to sideways. Good morning, Philip. Good to see you. Good morning, my friend from Belarus. I have to call you that because I just can't read your name. It's like alien to me. All right, well, this is getting me bearish here. They're getting resistance. The sellers are piling on, pushing through the zero line. I don't normally pick a direction this early in the day, but this feels bearish. I'll change my mind if we can get back above this node over here at 4309. If the market finds support and pushes above there, I'll go back to neutral. But otherwise, this feels like the market is picking a direction. And I don't know who would be buying right here. If it didn't work a week ago, buying in here, because you just got a dead cat bounce, why would they want to buy it today? So that indicates to me it needs a bigger pullback. Design knob, throw caution to the wind, go long. If it dips, keep adding. Sooner or later, you'll be right. Well, it's true. If you've got the the bandwidth to just keep adding to a long position, it's going to come back. It's going to go back to the all-time high eventually, which is a weak all-time high. And we've left a ton of poor references and weak references above us, right? Oh, I zoomed up too quick. We got gaps. Just look at all these little green things. These are all magnets to pull price up. Weak references, poor references, and the all-time high is weak. So, oh yeah, it's going to go back up, but it might not for another week or two, in which case you're going to have to keep buying that dip. Ooh, so they brought in some support right there. Can it hold? All right, so the selling continues. Going to test that low. Probably not going to find much support. But they're starting to liquidate a little bit here. Okay, very thin volume. So they'll need to come back up and backfill this a little bit. Buyers are stepping in right here at the 0 line on the ticks. So that's a good place for the buyers to step in, but if it breaks and the market continues to trend lower, that's even more bearish. Okay, it's starting to break. Okay, so now we're going to see, is this continue to act as resistance here? This node at 4302 up to 4304. Okay, that resistance held. Now those ticks are starting to trend down, increasing the odds of further downside continuation. Somebody's buying the dip. Okay, another push up into this resistance right here, this node at 4302. Vincent, hello to you. Good morning. Philip, good morning to you. GM, good to see you. Or JGM. Boy, that was my dyslexia kicking right in. JG, good morning to you. Miles, good morning to you. Good to see you. Arthur is here. Arthur asks, another down day? Sure looks like it, doesn't it? Sure looks like it. Good morning, Tom. Oh, you're in Egypt now. Well, I'm never going to remember that. You're the Belarus guy from now on. John, good morning to you. Miles got short, one small contract. Rocket voices, that's the first sign. Yeah, is that voice still going?
So about these fiscal elections.
Yeah, it's some sort of financial news. I don't know what it is. It's so crazy. I turned off all my apps and turned it back on, and it's like a ghost in my computer. I swear I'm not losing it. You guys can hear that too, right?
Because we're in a special circumstance here in the fall of this year. It was a foreseeable, slow-moving disaster, but here we are. But your credibility.
I'm not crazy. Nicholas, good morning to you. Armand is glad he didn't touch any calls this morning. Good call. No calls. Nodo Cactus, good morning to you. Ramen Trans 1, good morning to you. Welcome. Armand, I don't normally drink, but when I do, it's bear ale. A tasty treat for first thing in the AM. Well, I'm not going to lie, guys. I'm a little surprised the buyers keep stepping in here. This node is becoming support. Every time they push into it, they find support. But of course, we have a poor low now, which is in need of repair. And even if they got 2 ticks below, they just create another poor low. So we really need to get down here to at least 42.93.25 in order to repair that. Okay, there you go. They're repaired. So repairing that gives the buyers a chance, right? That weak reference is gone. It no longer needs repairs. There would have been orders sitting right there. So if there's enough bulls in the market to repair this or to cause the market to push back through this resistance, this should be where they enter. If the ticks continue to trend lower, price will follow. Man, they're really fighting for that low. Nick, good morning to you. Good to see you. Diane says she's buying the low at 93. Nothing wrong with that if it's a little quick trade, a little scalp. But I wouldn't fall in love with that unless they can get back above this like a 43.04 level. Is the ticker symbol on my chart ES? Yes, it is. You can see it all the way up in the top left corner. So now this area, this node that was acting as support before, the market kept pushing into it and buyers kept stepping in. Will it now act as resistance? That would be a sign of the continuation of a trend lower. Brian, I filled long. So now I see who those buyers are down here buying these lows. It's you guys. Like I said, nothing wrong with it as a quick trade, as a little scalp. But don't fall in love with it unless they can get back up into the value area of yesterday. Otherwise, sellers will just come back in and pile on even more. Henry, good morning to you. Wow, that was a quick move in the B period print. There are some algorithms at work right here. Let's see what the ticks are doing. Ooh, the ticks are starting to trend up. The algo is buying. Very interesting. Well, I just got stopped out of my short. All right. Well, technically, it's a good low, good excess. So now the question becomes, is this node at 42.98 become support? I just never trust stuff when you can clearly tell it's an algorithm, because I know those algorithms are programmed to trick retail traders. That's what they're literally designed to do. Buy until you overwhelm the retail shorts, push it higher, squeeze them out while you build a short position, and then boom, 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 push it right back down. They did it all morning yesterday. So I remain bearish unless we get above, let's call it 43.10. Get back up into this node of volume. Just because of the way it did that. Man, internal's looking good for the save. The dip was bought. That's so interesting. Oh man, you're right. Thank you, person who said, or Cindy Matt, for saying maybe it was the PAL thing from yesterday. That's what it is. Silence. Thank you, brother. You helped me figure out what it is. Oh, is it just a fake out? Were they just trying to squeeze some peeps? Jim, what tick are you using for the tick? The NYSE? Yeah, I have both the NYSE tick and the NASDAQ tick, just side by side. They pretty much move together, but sometimes you get a little more insights. I probably shouldn't do this, but I kind of just look at the NYSE as the S&P and the NASDAQ as the NQ. I know technically there are stocks in the NASDAQ that are in the S&P and vice versa, but I mean that are on the NYSE exchange, but I kind of look at them like that. Yeah, that was a fake out, guys. That algorithm was just programmed to trick people. Get them long so that the market could take their money. They got me. They stopped me out. Jimbo, news? Oh, you think that was news? What was the news that came out? ISM better than expected. Well, it looks like the market's digesting that and they don't give a fuck. Emanu, that's not true. It ain't just algos. Algos simply replacing what the speculatists used to do. Yeah, of course. Who do you think programmed those algorithms? I'm working on a video right now where I'm breaking down a documentary about Paul Tudor Jones from back in the 80s. And it's what he does. Like he goes in and he buys a bunch, and then as the market starts to raise higher, he didn't get a big enough position. So he turns around and sells it back into the market to push them back down so that he can buy back in at a better price, lower. So if they were doing it in the 80s over the telephone, trust me, they're still doing it today with their algorithms. Cinemat added to that short on the pop. You tend to nail those entries, man. You got skills to pay the bills, Cinemat. Oh, the narrative of one algo doing it. Oh, sure. I don't think it's one algo. But you don't think that those hedge funds call each other? Again, this is another thing in that same documentary, Trader, by Paul Tudor Jones. He literally gets on the phone every morning and calls up the other hedge funds and discusses what the plan for the day is. And there's literally, you can hear a phone call where the one guy's like, yeah, I think the market wants to go higher, but we're going to have to fool them by pushing it short first to get a bunch of people out of their longs. And it's like all of this stuff, man, it's not rocket science. Oh, specialists. Well, specialists or speculatists as well. All right, they bought it. They bought it. Tick's looking good. All the internals have reversed and are pushing up. That could have been the dip. My narrative stays the same, though. We got to get up in this node of volume here before I get bullish or I get neutral again. Looks like the Q is a little bit weaker than the ES. Yeah, NQ started one time framing lower. NQ's value is completely lower. Although yesterday was just overlapping to lower. That's interesting. So they got a lot of support from the overnight here in this 45-degree angle. That should take some grinding to work through. $27 likes, guys. We're 40 minutes into the day and we only have 27 likes. Oh, bummer. I tell you what, if you can get it above 60, I'll stick around for the rest of the day. But you got to push those likes. Push it. Push it like these buyers are buying this 97 level. So, Emmanuel, are you trying to describe that you think retail traders control the market? That you don't think there's any big money out there, that Goldman Sachs and all these big banks and hedge funds and family offices, you don't think that they have an effect on the market? You think that the movements that are happening here is just me and you, Joe Schmo, sitting in our basement taking trades with our little accounts? I mean, that's just like your opinion, man. Core working on anticipation of chop timing 75% a day. Do you mean 75% of the time the market rotates? I could definitely get behind that. That sounds right. We're one short of 60, guys. Need one more thumbs up to make this happen. $64. We made it. We made it by the hair of our chinny chin chin. Okay, that 97 level is still holding a support. Good morning, Naif. Good to see you. Salmon River, I could not agree more. Thomas, the ticker symbol, it depends what like brokerage you're using. Usually it's ES or ESZ1 or ESZ21. Miles, I would recommend ME. Yeah, if you can't even type in the ticker symbol, you should be trading the micros for sure. Jose, good morning to you. Miles, do you think we'll cross back through the open, bring in buyers? Crossing back through the open, would it bring in buyers? Oh, yeah. If we can get through this node right here from yesterday, we will have, this will have been like a V shape, and they'll start pushing higher for sure. At least to test that daily 100 SMA, if not to repair the weekend period high. But I do think this is going to be tough to get through. Q still trending down. And we're off to the races. The liquidation begins. Yeah. Donkey futures. Now is that actual donkeys, like contracts based on actual donkey sales, or trading donkeys future? I just want to know what I'm buying. I mean, I'll buy a bull market. But am I buying a donkey or am I buying your future? This is the question. Okay, so we can start looking at the overnight here for potential support. Like I said, to me, this is very bearish that we need to have, like on the daily candlesticks, a larger pullback to bring in the bigger players. But intraday, short term, we're likely to find some support in here where the overnight traded. I mean, there's just so much trade that took place down here. So that support starts at about 42.77.75 through about 42.70. Getting through that will lead to further downside continuation, but I imagine we're going to have to do some chop in there. I see, Doc. You have to, when the contract expires, you have to actually take delivery of donkeys. I'm not sure I have room in my apartment for that. Miles, back to the MES on this volatility. Yep, I like that. Playing it safe, playing it smart. Miles. NQ is free falling. Yeah, let's jump out on the daily on the Q and see where the larger support is. So the NQ just popped through their 200. That's very interesting. So they just popped through that 200 daily. Next big support is at 14,438. Okay, ES pushing down into, again, this node from the overnight should act as support here for a little bit. Get some grind. Bitcoin pumping a little bit. Yes, sir. Probably all that inflation talk yesterday. They also just broke through that downward trend line on the daily. What is the most random future? I did grain for a little while, for a couple months, trying to use weather patterns, trying to use news on the weather in the Midwest unsuccessfully. Did on my chart, the NQ push through. That's the... Oh, I'm sorry. Did I say 200? I meant 100. I messed myself up because I normally have the blue as the 200, but I added an extra one. Sorry. You're right. The 100 daily is what I meant to say. Good catch. Salmon River saying there is a trend line support for the NQ at 14,400 ish. I assume that's what you're looking at right there. You could also have vertical support right here at 44,437. 14,437. Also, you haven't quite crossed the 20 and the 50 yet, but the 50 is starting to turn down, which is bearish. But of course, the ES definitely crossed this morning. All right. Well, the C period printing has left some single prints here that need backfilling. We also have very thin volume in here. So if the market tries to get up here and backfill them, it should be able to. But it would not be unreasonable to leave them behind since we have a strong trend down. So if the market is able to get up here and backfill these, we look for resistance right there at the base of those single prints. Okay, so we're pushing our way back down again. It's going to take some grinding to get through all this support from the overnight. The bears are going to have to earn it. Sorry, Jitten. You know, I'm keeping the mic on so I can be quick with my responses, but I'm also taking trades. So shit's intense over here. Design knob. I need a restraining order. Uh, So a failure with single prints, generally what happens is once you start backfilling them, you keep going to backfill them. So if we just tried to backfill them, we got into thin volume. If we start to push back down here again, that's a sign of bearishness, of the continuation of the trend, because they should have been able to get back up into here, looking for resistance at the base of those single prints. So that's sort of a when what should happens doesn't. See, design knob, no, I don't talk to the market like that. I don't tell the market what to do. Miles, it's a great question. I don't know. It's one of those things I can't explain why, but it is just a very, very common pattern. Even to the tick, a lot of times, like it'll straight up come. I mean, it doesn't matter if it goes a little bit past and then pushes lower, but it will very commonly come literally to the tick and then reverse and head back down. What? Why? I have no idea. Maybe it's the candlestick low from that A period, right? Maybe they're looking at that candlestick right there and they're shorting it. I don't know. Yes, sir. Let's take a look at the Q. Okay, single prints, once again, same story, and a poor low. Stop going the wrong way. Okay. So the base of the single prints on the NQ. Is sitting at 14,606. But they have now worked their way through the support from the overnight. They created a poor low, increasing the odds that they need to come back down and repair it. And that would be the official signal. As we know, I now don't consider the market one time framing until it lasts into the C period, just because of how often the A and B go one way and then reverse the other. So if they get 2 ticks below this low to repair the poor low, they are also officially one time framing lower. Officially trending in an official way. Going downtown. Okay, back to the ES. Beep beep. Yeah, I love me some Hakanashi candles. They're bomb diggity. They're not good for entries. I've never figured out a good strategy for using Hakanashi for entries, but they are great once you're in a trade to keep you in it. For shizzle. Yeah, I never looked at the Renko, but I think they're pretty much the same thing. I think they're very similarly calculated. TP. Wow, it's choppy. Oh, yeah. Oh, yeah. At least it's not boring. Could be just grinding around going nowhere. My dialogue is urban today. What does that mean? Because I said faux shizzle? Dude, I'm from LA. Gotta keep it real with the DO double jizzle. Design up. That was, I need to speak to the manager. All right. Well, the sellers won't let them backfill those single prints, so that's bearish. Once again, we got to start pushing down into this node of volume from the overnight, which will get us one time framing lower on the ES as well. Okay, pour low. We normally get a push away from the pour low, but it comes back down to repair it. If it instantly repairs it right now, that is a slightly more bearish scenario. All right, I'm off to get a cup of coffee, look for the repair of the pour low, and then finding support in this node and a little more of this grind. So it pushes through, finds support, comes back up, finds resistance, makes another attempt. Back in a couple minutes. Trading Donkey, I know the right play is to short, but this market has conditioned me hard to expect the dip buy. Physically can't take a short. Well, it looks like you're about to get your chance for your one time framing trade here. I would love to see the C period repair the single prints first and then find resistance up there. But we're going to print that D in 5 minutes. And there's a lot of resistance in here, so there's a very good chance that it's going to have to grind some more to get through there. So maybe you get your one time frame in play. I'm also kicking myself for, I told you guys my new rule is I don't consider it trending until it trends into the C period. I called it one tick early. And the market's going to punish me for that. I'm just kidding. No, it's still trending down. Salmon River, advancers versus decliners. At zero line for a bit of support. Well, looking at the S&P ones, they're a little bit below it. But yeah, the buyers are stepping in here. Really stepping in on the Q. But they won't have me convinced until they get that D period printed and it gets above that C period. So the way that I look at trends, for those of you that are new to the channel, is I look at each 30-minute time period, and I see does the newer time period stay, the high of it stay below the previous time period. So let's say the D printed right here, and it doesn't get above that C period high. I consider that the trend down is still intact. And of course, as I've said, there's going to be resistance at the base of the single prints. Just pulled the POC lower, which is slightly bearish. Brian, I assume we were much lower when you said that, but yeah. If you're going to short down here, when you have those single prints up there, you have to accept that risk. That's the name of the game. TP, what do I think about the poor low BC? I think it needs to be repaired. Remember, poor references, unlike weak references, which you could easily leave behind, poor references are almost always repaired. Very, very high probability. So as long as the market is still trending lower, which it is, it seems crazy to say now, but it is still trending lower at this moment. Could change in 2 minutes, but right now it's still trending lower. That is a target to the downside. It's like a magnet. It's just kind of tugging on the price. Come to me, price. NQ low of day at DS2. I'm not sure what DS2 means, but it's got good taper on the low. Doesn't mean it will be the low of the day, but that if it was, it would be a good low. Okay, so here's the printing of the D period. So as I said, as long as the D period high stays below the C period high, it can go one tick above. But if it goes 2 ticks above, that is the cessation of one time framing, increasing the odds that the trend down is over right now. Man, that was quick. All right, so now I'm going to trade it like a normal rotational day, right? Looking for resistance above value over here to short back to the POC and support down here for a rotation back up to the POC. But on both ends, I'll be very cautious about my entries. I'll be cautious about my entries up here just because this could be a V-shaped recovery, right? As I said this morning, what the market needed was to pull back down to bring in stronger buyers. So there's a potential that that's what happened there. So I'll be cautious going short up here, and I'll be keeping my stops tight. And then down here, same thing with that poor low. If the market works its way all the way back down to here, there's a very good chance it wants to repair that poor low. So I'll be looking for the breakout there. But I will assume rotation. I will assume that when it gets above value, it's going to come back in. And when it gets below, it's going to come back up. Potential resistance to the upside could also be that 20 moving average on the 15-minute candles for both markets. Design knob, yeah. So what you need to do now is ask yourself, what was different between the 2 weeks that you were profitable paper trading and the last 2 days? What changed? Did your strategy change at all? Did you take different types of trades when you were on paper as opposed to what you're doing with real money? Were you less cautious then and you're more cautious now, or vice versa? And then also emotionally, what's the difference? When you were taking trades on paper, were you taking them like, oh, who cares? Just take the trade, and you didn't feel any stress about it? But then now when you're trading with real money, are you feeling stressed? Because if you can pinpoint what changed between, if you can pinpoint what changed between the paper trading and trading with real money, you can then develop a strategy to fix that. So for example, if it was like the emotionality of it, if when you were trading in paper, you were just like throwing in a trade and who gives a fuck, and then when you're trading with real money, you're feeling, stressed about the trades. Well, that's about position sizing, right? You want to trade with smaller size so that you can have that same feeling when you're trading with real money of like, oh, well, I'm willing to take this risk. If my stop fills, who cares, right? You have to get back to that. So really think through what shifted between the paper trading and the real trading. That's where you'll find the magic of making the corrections. Diana's saying 42.77 POC overnight trading. Correct. I have it a little higher than that. I have it at 42.74. Oh, no, a little lower than that. 42.74. But when I'm talking about the POC now, I'm talking about the regular trading hours POC. David V, could you say more about poor references and not weak references almost always repaired? Yeah, so this is one of those nuances that I had to figure out for myself. When I first took courses with Jim Dalton, I used to think every weak reference needed to be repaired. So like, let's say the D period comes down, it's only one tick away from the A period, so it makes a weak D period low, and then the market starts to trade higher. I would be afraid to go long because I would think that that reference has to be repaired. And then what I learned over time, the more and more I traded, I realized that the weak references, so that is references that are within a tick of a previous reference inside the day's range, those are weak. And that's just the term. Who cares? Just don't overthink it. Those are weak references. Those ones, they tell you first off that it's short-term traders participating, which is just an extra piece of information. And they do get repaired a lot of the time, but they don't have to. The market can easily leave weak references behind. For example, look at the end period high from yesterday, right? We left that end period high there, no problem, right? So you can leave weak references behind. So the way I think about them is they become exponential the more of them there are. If you have a chart where there's like 8 weak references below, then there's a very high probability that at least some of them will get repaired. But if it's just 1 or 2, who cares? Don't overthink it. Don't worry about it. They may or may not get repaired. However, poor references, meaning that it's 1 tick away from the higher low of the day, that does almost always get repaired with very, very, very high probability. And even if it takes like weeks later, like a lot of times, especially poor lows like this, we'll leave them behind on the day, and then the market will trade higher for another 2 weeks. And then we have a massive sell-off and we come back and repair those poor lows. That's why this morning I pointed out the low from the 19th as a potential great support level because it was a poor low. It's been needing to get repaired for a month or for a couple months, right? It's been waiting to get repaired. And so it would take a big correction in the market to come back down there and repair it. But once it does, once that's repaired, then the market can continue higher. So yeah, poor references are much more potent than weak references. The other way they're different, which is where they get complicated, is weak references, you just create it and who cares? It just sits there until you repair it. There's nothing more to think about with it. But with poor references, they cause the market to push away from them. They cause the market to go the opposite direction once they're created. And so it can be very tricky to figure out, did the market reverse here, or is it just pushing away from the poor reference and coming back to repair it? So that's another nuance you want to take into consideration. If the market hadn't have gotten the one-time framing here, say the D period high had only gotten to here, I would still assume this was just a push away and that we're coming back down to repair it. But now, because we got that cessation, that's a more potent signal that the market is ready to rotate, that the fear has been absorbed and now it's two-way trade. Okay, so first potential support to the downside is going to be this node right here, starting at about 85. If the market finds support in there, look for a rotation back up to the POC. If not, they probably need to repair that poor low first. If you liked that explanation of poor references, please smash the like button. Hit that thumbs up. It's just a nice thing to do to help me and you to bring in more people. River Rock, so went above the C period and reversed. Tough market. Yeah, I mean, that's just rotation, right? That's what, when the market is rotational, every time it gets back to the POC. So first, getting above that C period high gave us the signal that it's rotational, right? And then we know once it gets back to the POC, which it just happened to be right at it when it went rotational, that the two-way auction process starts again. So every time it rotates up or down and comes back to here, it starts over. It can go either way with equal probability. You have to just think about it like half the people think it's going to go up, half think it's going to go down. So they're just making bets with each other. So yeah, to me, that's no big deal that we just got, a couple points above and then came back down. That's what the market's going to do for the rest of the day. It's just going to rotate. It's going to push. They're going to push the sellers as far as they can until the sellers run out. Then the buyers will take over and they'll push as far as they can until they run out. And then the sellers will take over and it'll just keep doing that. What's tough for me about this is the amount of volatility, the size of the range, because we probably won't, that I like to enter above or below the value area, and we'll probably do most of our rotating inside of there. So it's kind of like there'll be a lot of just waiting around for a better entry. And then when it gets up here, as I mentioned earlier, I'll be scared that it's the V shape, right? And then it's going to take off to the upside. And when it gets down here, I'll be scared it's the repair of the poor low, which could lead to a breakout to the downside. So there'll be tough trades to enter, but man, look at the rewards if I do. Look at how much profits I could make. So there you go. It rotated down, came back to the POC. Now it's on its rotation up. Two-sided trade. Yeah, baby. So now I'm looking for resistance. Likely going to find it in this node here. And I can put my stop just a few ticks above that opening. Because if they're able to get up there, get through all of this resistance, they'll probably try to push to the upside. They'll see that V shape and they'll go for it. Another potential resistance just jumped out at me is that 20 simple moving average on the 15-minute candles. So what am I looking for in resistance? Well, we've got that 15 moving average. So I'm watching the ticks. Do they start to push down here? That's a sign of the resistance, the seller stepping in. Right now, it's still pretty strong. John, thank you so much for stopping by. We'll catch you next time. hitting dingers. Are you a member of the Brigade? That's the best place. The only real educational thing I have is me talking like this. So there's a link in the description below. It only costs $10 to join. And you get access for a full month. And you can ask me all the questions you want to ask and learn. Oh, you're in the Brigade? Well, there you go. I am working on some like standalone educational content, but I haven't. I'm nowhere near finished with it. There's a lot of work ahead. But if there's anything you feel like you're confused about or you have further questions, just ask and I'll elaborate. There are no wrong questions as long as you're new. Sure. I'm just in the middle of answering an email, so I'll go over it in just a second. But are you saying my brief summary of my rotational strategy? Specifically how I trade rotational days or overall looking at market profile? Yeah, hot Carl. you know. You know it drives me crazy. Okay, cool. Yeah, give me a minute and then I'll go over that. All right, I'm back. Okay, so far they're pushing through the resistance of that 20 moving average pretty easily here, and also all of this volume that we had from yesterday. So we do have a potential that they might be breaking out to the upside here, as I mentioned, in that V-shape fashion that they are so fond of in this market. We can see that perfect V on the regular candlesticks there, both indices. So if they do that, the next target to the upside is the 100 daily moving average. I wouldn't take a long trade until I saw them get above I would say this node right here. Normally I do the high of the day, but that's a little far away. So I would say if they get above 43.18 and come back down and find support, I'd be willing to go long to target that. Otherwise, the assumption is a rotation back to the POC. So because of the specific circumstances of today, it's not a great day to try to teach the rotational strategy. This is an unusual thing, right? You don't normally have a massive, huge pullback that instantly recovers on a poor low when value is overlapping to lower. So there are days where these things are very routine and they do the same thing over and over again, and you know exactly what to expect. And then there are days where the market is kind of doing something random, and you have to be more loose about how you look at things, and especially how you enter trades, and so on and so forth. So I'll use today right now as an example, but it might not be a great day to use as an example for what a normal rotational day would be. So just to give you some perspective, let me zoom out and just find a different day so you can see. That was a normal rotational day, but still, again, with very large range. Okay, so here's like a normal rotational day. This was the overnight, but you can just see it's a very tight range. Whoops. It's a very tight range. It's very small, and it just grinds up and down all day long, passing through the POC. So we get these all the time. Just over and over and over again. But that's in a normal market, a market that's just working its way higher very slowly. Excess, balance, excess, balance. What's happening now is something much bigger. It's a correction on a longer term basis. So it's not easy to use as a teaching moment for what to expect on a normal average every day. But I'll still just do my best. Okay, so there's two basic things that can happen in the market. Okay, there are trends where the market is continuing to move one direction. It can be up or down. And then there is rotation, where the market is just going up and down like this. Okay, and the market is always 24 hours a day, 7 days a week, doing one or another. Now, it doesn't have to do it all day. It can start trending and then go rotational. That's what happened this morning. It started trending down, and now it's going rotational, right? Or it can rotate and then out of nowhere break out of that rotation and start trending down or up. But it is doing one or the other. And the simplest way to think about it, don't get over exacting in this, but it's just a simple way to think about it is when the market is trending, it means more of the participants think it's going to go that direction. And when it's rotating, it just means they don't know. Half the people think it's going to go one way, half think it's going to go the other. Okay, so that's just a simple way to understand, is the market trending or is it rotational? Once it's rotational, which for us, the signal is getting 2 ticks above the previous high. Once we get that signal that it's rotational, we make that assumption that now we've switched from more of the participants thinking it's going to go down to 50-50. And so the point of control, which is this green line of numbers here, that is basically where the market has spent the most time today. I use what is called a TPOC, a time point of control. You can also use volume point of control as well, which is just where the most volume traded. But the time point of control, We call that the point of control because the further that it gets away from it, the less control the buyers have, right? When they're in here, they got tons of power. They can keep pushing and pushing. But the further they get away from there, the less and less buyers there is. And then they slowly start to run out. And once they do, then the market has to come back down to that point of control. Okay? So then the sellers might take over and take it lower. Or maybe the buyers step back in and they take another stab at pushing it higher again. Once you get back to that POC, anything can happen, right? It's a 50-50 probability. So the way that Jim Dalton teaches it is he calls that point of control, and this is only on a rotational day. The point of control doesn't matter when the market is trending. But when it's rotational, we think of that as the fairest price to do business. So right in here, this is the fairest price to do business. So anybody that's buying above that price, they are overpaying for the market. They're paying more than a fair price. Well, how long is that going to last? How long are people going to keep paying more than the market is worth? Probably not that long. So at some point, they're going to run out, right? And same thing below here. If you're below the POC and you're selling for less than the market is worth. Well, how long are people going to keep selling for less than it's worth? Not for very long. So eventually they're going to run out. So that's kind of the way to think about that point of control is like anytime you're above it, you want to be a seller. And anytime you're below it, you want to be a buyer. Because if you're selling above it, you're selling for more than it's worth. And if you're buying below it, you're buying for less than it's worth. And as a trader, that's the way you want to play, right? So the way I have learned my personal strategy trading rotational days is I have learned that it's very hard to nail trades inside the value area. This blue box right here. Okay, it does look like it's trending to break out here. So again, this is a bad example as a day for a teaching rotation. But so I like to think of inside that blue box, it's very hard to guess where is it going to reverse, right? It might push up. It might push up to here and then reverse back down. It might push up to here. It might only go right there. You never know where it's going to reverse. So if you're going counter to that move, it's hard to know where to put your stop. So for me, I wait until the market gets above that blue area. And then I know I can put my stop above the high of the day or below the low of the day, right? So that gives me good risk reward. I know if I'm buying here, what position size do I buy with if I'm taking this much risk? If I'm buying here, what position size? And so on and so forth. So that's pretty much what I do all day, every day on rotational days is I just wait for it to get above value. I look for something that's resistance. Maybe it's the 20 moving average as it is here. Maybe it's nodes of volume. Maybe it's watching a reversal in the ticks. Something that tells me, okay, the market's running out of buyers. Then I short it and I stay in that short till it gets back down here to the POC. So that's the first observation, right? Go short above value, target the POC. Then what I learned was, again, once it gets into the value area, it doesn't have to always get back down to the POC. So what I do is as soon as it gets back into value, I move my stop to here, and then I kind of just trail it as the market works its way lower. And if it comes back up, if it's grinding and it comes back up and fills my stop, I can just re-enter right there. Who cares if I think it's still going to make it to the POC? But I like to be able to get out in case it just reverses and pushes back up. So then the question becomes, all right, Charles, I hear you. We get the 2 ticks of excess and we assume it's going to keep doing this. Well, when does that stop? When do we no longer rotate? When should we no longer be going short? For that, what I look at, and again, today is not a good example, but on any other day, I look at the high of the day, right? At the upper end and the low of the day at the lower end. And what I look for is what's called a breakout at that level. So what a breakout would look like, I'm sorry if you've heard this a million times before, just feel free to mute it. So what a breakout would look like is the market gets above that level. And that doesn't mean I go long, okay? I then wait to see when it pulls back down to the high, does it find support there? And the way I see that is volume will start to come in here. We'll start turning some of these candles pink, and the internals will be moving in the direction of that. So if we're breaking out the high, we want those trending higher and above the zero line. If we're breaking out of the low, we want them trending lower below the zero line. If I don't get both of those things, if I don't get both the ticks trending and above the zero line and volume stepping in, I do not go long for a breakout. I instead wait, because the higher probability thing is it's going to push above and then rotate back down. If the buyers don't step in at the high, it's going to rotate again. And that was just to squeeze out the stops, right? So that's the way I think. And until I get that, until I get the market pushing above and then finding support, I just always assume it's going to rotate back down. And I can't tell you how much money I've made by making that assumption over and over again. Because it'll come up here and almost break out. You know, it'll come up, rotate down, come up, rotate down, come up, rotate down 10 times. And I'll make money every single time. And then one time it'll break out, my stop will fill, and I'll take that little bit of loss from that one trade where it happened to break out. But all the others will pay me. So it's a matter of probabilities. So that being said, that's a normal rotational day. Today is a little different. The market needed a larger pullback to bring in buyers. It seems to be doing that. The ticks are continuing to trend higher, staying above the zero line. The other internals have all reversed and are completely V-shape. So this does feel like the market wants to break out and continue higher. So I'm not looking to short this right now. As a matter of fact, I just had a stop. I got into a short here and it just stopped out above the open. Okay. So I'm just going to wait for the breakout at this point, or catch the rotation if it fails to break out, you know, somewhere in here for the rotation back down. Man, my mouth is dry from all that talking. Miles. Is that volume I see? See, Marshall, should I put in a rule that says you can't ask a question, you can Google search? No, because Google might give you all sorts of weird results. And even like Jim Dalton, who I learned from, there are a lot of things I've changed the way I look at them. I don't look at them exactly the same as him. So it's okay to ask. One more question, if I may, David asks. On the tick script chart, do you treat candlesticks the same as you might on a regular chart? For instance, looking at wicks as a sign of rejection? I do, yeah. Really, the main thing I'm looking for on this is trends. Higher lows, lower highs, and is it above or below the zero line? But I ignore wicks. So for example, this to me is clearly trending higher. Even though this one wick dipped below and made a lower low, because it's just a giant wick, who cares? This is trending higher. Same thing here, right? It's trending higher. All right, this market's trying to break out. Down, 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 down. And of course, that's just because all the market generated information is telling me ticks trending higher, broke through the 20 on both indices. The other two internals are trending higher. Every time we've pushed up and pulled back down, we've brought in support. So this market is trying to break out to the upside here. Cotton dog is rotational and balancing, the same thing? Same thing. Yeah. 2 words, same meaning. Cotton dog on an intraday basis is a failed breakout and a look above and fail the same thing. Yeah, basically. I would say a failed breakout isn't as potent as a look above and fail, because a look above and fail will take you to the opposite end of the range, and all that a failed breakout will do is take you back to the POC, which is usually like halfway. But yeah, it's essentially the same thing. The buyers thought they were going to win, and then they realized they were losing, so they get squeezed out. Hitting dingers, yeah. So this 20 moving average on the 15-minute candles, it very specifically has to be only the regular trading hours. So you can use the futures and just exclude the overnight, or I just use the SPX and the NDX. And it very commonly acts as support resistance intraday. All right, here comes the breakout. Trading Donkey, big orders are still net selling this. Well, they must think that breakout's going to fail. Debeeped. Yeah, the internals are these 6 screens that you see here. So it's the breadth, the advancers versus decliners, the ticks for the NYSE and the NASDAQ, and then I just really look at the 15-minute candlesticks for that moving average. I'm not really paying attention to patterns in them, more just looking at the moving average. Miles, short covering rally soon? My guess is a lot of the shorts already got squeezed. There might be new shorts piling in up here, but there's definitely going to be resistance at that 100 daily. So I don't know that we have much of a pop coming, much of a boop boop, but we'll see. Okay, poor high. We often get a push away from a poor high and then come back to repair it. So if we were to instantly push through, that would be a little more bullish. Jamie is a Ninja Trader capable of creating a similar looking. It is, but you gotta buy like a package. You can just Google it. You gotta pay extra for it. J Trader, I can do better than clip them. I'm making standalone videos that are going to be far more in depth than that. and be able to show actual data and research and probabilities. All right, so this is what I was looking for a breakout. So now what I'd like to see is pink candles up in here, although this may kind of count just because of the size of the range. But I'd like to see some pink candles come in here and see those ticks continuing to stay above the 0 line. Either of those things fail, and we're likely to rotate back down. So I should FOMO into a long, right, Charles? That's what you're saying? It's breaking out. I should FOMO? No, sir. 92 contracts right there. Increases the odds. The market has to come back down here and look for support. That is what you buy. Even if they push all the way up to here, they still got to come back down and look for support. Another little nuance is it doesn't have to, any pink candles above the high counts as buyers stepping in. It doesn't have to be exactly at the high. So for example, if they were to grind right here and start turning these pink, that would still count. Miles is going golfing. Enjoy your weekend, brother. Yeah, you don't know though, Donkey, if those are stops. You don't know if that's just people who bought, you know, the lows of the day that are just taking their profits up here. Would you recommend Mind over Markets or Markets in Profile first? They're both great reads, but I always tell people if you're going to pick one, read Markets in Profile. Pretty much everything you need to know from Mind over Markets is also in Markets in Profile. It's just a little bit more updated as it was written 20 years later. All right, so this is them bringing in volume, but they didn't bring in very much. So again, I think we're going to get some resistance here and then have to pull back down to that A period high. We're also potentially losing the uptrend on the NASDAQ, which is the first kind of signal that maybe this is over, the push higher. Often I call it the one big red tick that breaks the trend, but this is kind of a slow break here. Oh, there you go. Diane is saying if you've got the lifetime license, you can get that market profile for free. Seems like a fair deal. I just switched to the IQ feed this morning. After all the fees and taxes, it's $200 a month. So I'm paying $200 just for data alone every month. Because Window Trader only has a couple of different companies that you can use for data. And the one I was using, Bar Charts, which is the cheaper one, that one was like $150, kept having problems. Like every 2 or 3 months, there's some problem and it doesn't work and you have to deal with it. So I switched to IQ, which is like the one that never has problems. It's the best of the best. So you got to pay for the best. Did it for you, Donkey, so you could keep watching the stream and never have any problems with the data. Why does it cost so much, TP? That's what they charge. I don't know. Ask them. All right. So far, what are the signals I said I needed to go long here? I needed to see pink candles above the A period, and I need to see the ticks continuing to trend higher and stay above the 0 line. So right now, this feels more to me like it's still just going to rotate back down. Now, I probably won't make it all the way to the POC because it's so far below, but certainly down into this node around, 3410. If they can't bring in the buyers now, that's where we'll go. Trading Donkey. Thank you, brother. Every little bit counts. Yeah, TP. It's like I said, it's this company, Window Trader, right? They only allow a couple of different data feeds, and they're very expensive. So if you want the best software there is for market profile, you got to pay for it. It just is what it is. I could easily use market profile on, TradeStation, James brings up is a good one. Like, there's a bunch that have it. I could get NinjaTrader. I could do one of those, but then it wouldn't be as good as this. So I'd rather pay a little extra money and have the best of the best. And it's going to get even crazier because I'm about to upgrade right now. I'm using the light version of the Window Trader software, which is like $150. But I'm about to switch to the full version for when I start recording that educational content I was talking about earlier. And that one's $300. So in total, I'll be paying $500 a month just for the chart, just to have the chart to look at. But it's an investment. You know, when I record videos, I record with the most expensive, highest quality cameras I can get because it just looks better, even if it costs more. Double Eagle, are most data fees that high? No, there's a lot of cheaper data feeds out there, particularly through brokerages. It just so happens that this software only allows you to use the expensive ones. TP, you'll stay here for life to support me. Appreciate it, brother. All right, so as I see this node starting to turn red here, I look back at the ticks. Is it buyers or sellers? It's looking like it's more sellers. Kawal? Kawal? Welcome. Thank you for the sub. Please explain a little bit about the view. As for your 20 contract short, should you hold? That's, of course, up to you. I don't advise people specifically what to do. But I will just say the market is setting itself up to break out. If the ticks can remain above the zero line here, the market can continue to push higher up into this 20 daily moving average, simple moving average, right around this node of volume that we have here. So if I was short the market right now, I would certainly have a stop above here. If not, looking to exit, pretty much now, if I think those ticks are going to hold. For me, it's too early to say, though. They could be trending down and they're going to break lower, in which case we'll rotate back down. Or they could be finding support right at that zero line to continue back up. So for me, I'd be flat right now waiting for more certainty on that. But it looks like we just got the break as I was talking. So I'd stay in those shorts. But when it rotates down, look for where it's finding support. And then take your profits. As far as what you're looking at here on the screen, this is a market profile chart. It's basically the same thing as a regular candlestick chart, but it just shows the information in a 3D manner. So we can see volume and time at each price level. So each letter that you see here represents a 30-minute time period, like a 30-minute candle. And then over here on the left, that is the volume that trades at each particular level. The numbers show the exact number of contracts. The colors of the bars and the size of the bars visually show you how much. So the darkest color, red, that's the top 30% of volume. The pink is the middle 40, and the white is the lowest 30%. And then obviously the smaller the candle, the less volume. All right, looks like it's breaking. It's rotating back down. Look for support at the 20 moving average over here. What else when it comes to market profile? The blue box you see, that is the value area. That is where 70% of the day's trade has taken place. This white line in the middle here, that's called the halfback. That's basically just 50% of the range. It's a common retracement level. Going down, ding, ding. Why do you bet so big? Because I'm addicted. Yep, that's pretty common. So this F period low is weak, meaning the market needs to get 2 ticks below it to repair it. I guess when you say the buy target, you're asking where to take profits. Again, man, I don't really give signals like that. It's totally up to you. You know, when I'm short above value on a rotational day, once the market starts to drift down in, I just trail my stop. But the target is usually the POC, the point of control. But with the size of today's range, maybe the target should be the halfback. So 43.01. But I'm open to the possibility that it doesn't have to get down there, which is why I would trail the stop. The one thing that's a little bit bullish to me, not really bullish, but you know what I mean, not bearish, is normally when the market fails to break out like this, you get a big red tick that just boom, it like breaks the trend and it falls down. This kind of slow, grindy pullback means the buyers are trying to support it. So I have a little bit less confidence on a major pullback here, but I still believe that's the highest probability. TP, that's a great question. Trail by points or structure? Structure. And tempo. I kind of watch how is it falling? This like slow grind down, that's, I'd want to be nice and tight. But if it's like popping down, I give it some room and let it just kind of keep falling and then follow it down. Right above this note of volume is where I'd put my stop. This is the current resistance right here. So I just put my stop right there. Did C ever get that second tick below B? Oh, you mean is there still a poor low on the day? Yeah, no, there's still a poor low. Never got it. So this 100 daily moving average will be an interesting level to watch today. It acted as support the first time we hit it, which was it was down here at the time, but it was support here. And then when we broke through it yesterday, it became resistance. So will that remain resistance today, or can we break through it again to the upside? And it seems like that's what the market wants to do. It wants to test that 100 daily again. Donkey, if we're ignoring A and B and C never got the excess, maybe I should trade this as a trend day up. Yeah, and also the breakout you could trade as a trend day up. That would be perfectly fine. Getting above this A period high, bringing in some pink candles, which is what we're doing right now. Getting those ticks above the zero line is a sign of a breakout. So you could trade that long as a trend. Like I said, I just don't know what's going to happen here. I think there's going to be some sellers waiting to dump on the market up in here. $42.88.5. How much possibility that we close below there? I mean, I don't have a good answer for you, my friend. I'm sorry. It's possible, right? It's very, very possible that if we get resistance up on that 100 daily, the market rotates right back down. So essentially, if the market pushes, stop doing that, computer. So if the market pushes up into here and it can't get above this level, that we rotate back down. And then, of course, it's always possible we could end the day below there. We did leave a poor low behind that's in need of repair. But that doesn't have to be repaired today. That's the thing. So if you asked me right now to give you a percentage, just pulling it out of my butt, what I think, I would say maybe 20% chance that happens. It's really tough to say. Until we figure out what's going to happen at this 100 daily, it's really tough to know where we're going to close. It's also a little bit now that we're zoomed out and I'm looking at it, like, it's a little suspect to me that we found support right at the top end of this node. We should have needed to trade into that a little bit. That's some short-term trader shit right there. So if it's short-term traders that bought the lows here and then they meet resistance up in here, what are they going to do with those contracts? Back to the POC. But I will admit, guys, this is a tough read. Feels like it's trying to break out, but it's got so much resistance above it. Who knows? Chris back to zero. You you think that the stock market's going to take back like 200 years worth of buying? Boy, wouldn't that be interesting? I'm sorry, your query is lost amongst. You asked about that level. I told you it's. I if I'm guessing, I'd say 20% probability. And you're saying is 43.20 an important level? Um, Not particularly. What's more important is the ticks. It's just what's happening here is support resistance, right? The market is trying to push higher and it can't get above there, but every time it pulls down, it finds support. So it's like it pushes up, can't get above, comes back down, finds support, tries again, tries again, tries again. So that's buyers and sellers competing over who's right or wrong. The ticks, who cares about price? Price is just an advertising mechanism. It's just tricking people into going long and short. The ticks are showing us more sellers are doing business than buyers, which increases the odds of the rotation down. But there's nothing about this particular level that matters. They can rotate down, find support, and then go poke right back up through it on the next attempt. My charts don't tell me whether they're buyers or sellers, just the total number of contracts that exchange hands. TP, please comment about the overnight profile. Would you say the whole seller was absorbed at the low all night and it took it higher to sell it at the open and now we'll take it lower? Kinda. I don't really have a good answer for that. That's what it felt like this morning, right? That's what I said, because they pushed it higher like an hour and a half before the market opened. Because they did it just like that, boom, took it up here. That to me felt like a warning that maybe that was larger players getting the market long so they could get a better position on a short. But if that was the case, we shouldn't have finished with a poor low. The trend should have continued to the downside. So honestly, I don't know. Me no no. The more time I spend looking at this, though, it's just like I feel like if Jim Dalton were talking right now, he'd be short the fuck out of this to repair that. Because he would say that's weak hands. That was not bigger players that bought this low. because of the exactness of the fact that it was right at the beginning of the high volume node and it was poor. That is not how bigger players buy. They ladder in. So they would have had their orders like this. You know? Donkey. I don't know if you're making fun of me, but wait, I'm going to drop the video and you can watch it happen. If they were doing it in the 80s, trust me, they're doing it now. Shalom? Yeah, that's some like 3D chess thinking there. Could be. Like I said, I'm sorry to oversimplify things, guys, but I just want to see a test of the 100 daily. And does it remain as resistance like it did yesterday? Then I'll have more information moving forward. Until then, the buyers are desperately trying to break out. So that's the thing I'm always asking myself. What is the market trying to do? That's the first question. And then how good of a job is it doing of it? The buyers are desperately trying to break out higher here, but they're not doing a very good job of it. So it's like 50-50. Will they win or will they not? They're trying to win, but they're having a hard time of it. So I just don't know right now. Trapping bull longs or short longs? Did I say something weird like that? Now, what he's suggesting is that they're letting it push back up into here so that these buyers, right, when the market, so say the market pushes up to here, then the bigger players step in up here, right? And then when it comes back down, these buyers get squeezed out. And then the market drops very quickly. And they don't have to waste much time worrying about this trade. They can instantly be in the profits. But who knows, man? Nobody knows what's going to happen till it does. Cotton dog, that is a perspective. I don't see it that way, but that is certainly a perspective. And no, a poor low doesn't necessarily push the market to the opposite end of balance. A look below and fail does, which is where essentially, actually, we could look at today as a look below and fail of yesterday's range. So there you go. But yesterday's range was so fucking enormous. I doubt we make it back to the high. But no, a poor low just means a push away. It doesn't mean any particular distance. This is not the push away from the poor low. This is new buyers stepping in. Trading Donkey, I did think that thought. Earlier when I was explaining that poor lows almost always get repaired, I thought to myself, I don't want to make it too complicated for new people, but in this market, a lot of time poor lows are less likely to get repaired than poor highs. But then they do get repaired. They just get repaired like 3 weeks later on a massive pullback. Because remember, like a couple months ago when we were noticing poor low after poor low stacking up, all that shit's been repaired now. So it does get repaired. It's just a matter of how long it takes. But I don't want to over confuse the new people. Ooh, Brian, I like the sound of that. 4250 is important if you combine the entire year into one profile. I wonder if I can even do that. All right, so the bulls step back in. But like I said, I don't know if they're going to be able to make it through the resistance that's waiting for them up here. We'll have to wait and see. This is probably going to give my computer a heart attack. Trying to load a whole year. I'm going to let that load up. Give me a minute here. I'll be right back. Yeah, unfortunately, I can't do the full year because I don't know what the symbol is for the combined contracts. I can only get the Z contract on here. I literally just switched to IQ today, so I don't know their tickers. All right, that's what at least the last like 10 months looks like, is one giant profile. And again, ignore the volume because this is just the Z contract. Yeah, nothing jumps out at me with that, but interesting. Yeah, I could do it on TradingView for volume profile. No doubt about. Yeah, so if you're looking at volume profile on the daily for the ES, we're kind of in a low volume node area here. So that would mean the next resistance is right up here around that 100. And that potentially, if that comes in as resistance, we're trading back down here, which is right where that poor low is that we left behind. So volume-wise, on a longer-term basis, there's something to be said. that it would be a lot more work to push through to the upside than it would be to bounce and continue lower. Meanwhile, the market is just grinding around here, trying to make a decision. Can we break out? Do we have what it takes? Oh, Cotton Dog, I can click the 1 year. There you go. Thank you for the tip. So looking at the internals, what am I observing? What's catching my eye? Well, we still have an uptrend here in the breadth, which is positive. The advancers versus decliners are pegged here at this higher price. Right? They pushed all the way back up, and now they're pegged at the moment. So that's somewhat bullish. The ticks aren't really giving us a clear trend either way. But if I had to guess, they look more like they're trending down than up. But they are mostly staying above the zero line. So to me, this is, they're trying to break out, but they won't get much for it. Not unless they bring in more new buyers. And in my mind, that means we have to get above the 100. Getting above there, coming back down and finding support, that's the chance for buyers to really step in. But until then, it's just going to be more of this uncertainty, slow grind. Why are Homer's legs spread open? He's having a baby, obviously. Oh, the slow grind to try to break out. Once again, I do feel like they're going to get it. I feel like they're going to get the push up to test this. But they are having a really hard time of it. All right, I'm going to go make some food. I'll be back in a couple minutes. All right, is it finally time? Are they ready for the push? Here they go. Going up, ding. Creating a poor high. Once again, as always, we expect to push away. If it's immediately repaired, that's slightly more bullish. There you go. Immediate repair. Little squeeze. And now, as we push our way up into this node of volume from yesterday, which is right on top of that daily moving average, now we look for same thing as the breakout above the A period high, right, which they barely pulled off. But beyond that, same thing as that breakout, we're looking for the market. Can it get above this level and then come back down and find support? That would be extremely bullish, not just for the rest of today, but moving forward for continuation to the upside. But if they can't, if this remains as resistance, you're looking for a rotation back to the POC, which, Jamie, thank you for bringing it up, has been pulled higher, okay, making it a more reasonable target than the one that was down there from earlier today. So let's see what they got. Arthur, is it time to buy or sell now? Well, it depends what kind of trade you want to get into. You know what I mean? And how you see the market. To me, the question I'm always asking myself is, what is the market trying to do and how good of a job is it doing of it? It's been trying to break higher here for the last couple of hours, but it's been doing a terrible job of it. So the only way that the market's going to continue higher up into here later in the day is if they can bring in new buyers, right? Right now, there's not enough people who believe the market's going to go higher to really give it much of a push. This little move right here was just a short squeeze. We know that because the second it got above that E period high, it just popped. So they were just hitting people's stops. That's all that was. So for this to continue, we need to see a lot of volume coming in up here. We need to see the market get above this level, come back down and find support and start to bring in real buyers. Buyers that look more convincing than this. These candlesticks on the ticks just look like rotation. They don't really look that exciting. So we need to have a clear trend up. Okay, and they need to stay above the zero line. Any failure to do that, the same as I said earlier today, when we got above that A period high, will likely lead to a rotation back down. Remember that we couldn't do that when we got above the A period high here. We had this push up, couldn't bring in the volume, couldn't keep the ticks going, so then we had to pull back down. So the same thing will happen here again if we can't bring in that volume up here. This is changing hearts and minds zone right here. We need to convince people that this bounce is legit and that it's going to continue higher. If not, it'll rotate back to the POC. So the question of do you go long or short here? Well, it depends, which direction do you want to take it? If you're going to go long, it would be a really quick scalp trade to try to break through. If you want to go short, you got to give it some breathing room on the stop. Or you could just wait, sit on your hands and see what they do. But I don't know, guys. The more time that passes where the market is grinding like this, the more I'm feeling like by the end of the day, by that M period, we're going to be back down here in the lower end of the range. It just feels like the market's having a really hard time bouncing back. Could be wrong. And I'll know I'm wrong if they get above that 100 daily and stay above it. But it feels like they don't have the power. Fausta says, I don't see that. I see the H pattern doing the damn thing. Hell for shorts. Yeah, I mean, like I said, until they get above that 100, they're not going to convince me they're going higher. One thing that does jump out at me right now, though, is with this note of volume being so big, all the support we built in there, we should have gotten a bigger pullback here. So that's noteworthy. So we'll watch the ticks. We'll see if they keep trending higher. Do they stay above the zero line? And we'll watch for those pink candles up there by the high. Oh, you're saying you see an age pattern on the daily chart. Yeah, it doesn't. Again, I'm looking at the daily right now. It doesn't look that great. They'll change my mind above that 100. It'll look totally different. Right, the shape of the candle looks good. But just imagine if they can't get above this 100, and then by the end of the day, we've rotated back down, and we're in this range, somewhere in here. Will that look bullish to you? Not to me. I guess you're saying you think this is the H, like, beep. Yeah, there's a W. There's also an M, kind of. There's a camel hump. Drinking camel. Camel getting some water. Donkey sees an elephant. Oh, like that's a daily, the last like 6 days is the trunk. Or no, it's the other way. It's like, this is the elephant's legs here and his body, and that's the trunk. And he's a smiling elephant. He's happy. Pooping elephant? It's a pooping elephant. All right, looks like they're about to grind through that moving average. What you got, buyers? You gonna bring in some friends? Cindy Matt. Nah, man, it's the chart pattern. Look it up, bro. Look it up. The pooping elephant. Is it autonomous? All right, they're getting those trends to tick up. That's the first thing we look for. Are they trending higher? Are they above the zero line? Next thing we need is to see the volume, to see those pink candlesticks. and obviously to get above the 100. TP. Happy to help. Where can you short and when can you go long? Again, I'll literally repeat what I said just a few minutes ago when somebody asked that. You could go long here for a scalp, right? The momentum is still to the upside. The ticks are still trending higher. We're still trying to break out to the upside. So you could go for a short, a very quick scalp to the upside. You could go long. But I wouldn't get long here with like the hopes that we're going to keep traveling higher. For that, I would wait for us to get above and then find support. That's when you enter the long, right? You enter in the support when you see the volume building. That's when you enter that. If you're going to go long right now, it has to be just a very quick trade that you're not going to fall in love with. And then the same thing on the short side. Why not wait to see if they can get up above here first before you go short? So watch it push above, come back down, and then when it gets back down to this level, same level you're about to enter short right now, but then you have a better idea of what's happening with the ticks. Are they still trending higher? Is the volume coming in? Or is the volume still very thin? Are the ticks starting to kind of pull below the zero line? Then you can enter the same shorts, but with a higher probability of the rotation down. So we patiently waited for the market to break out through here to see what happens at this level. Let's wait and see what happens. Then we enter the trade. It's just how I look at the markets. Jonathan, good day. Okay, H period leaving some single prints behind. So those are likely to get backfilled. Jonathan saying get ready to go short. I'm surprised you're not like, look at the trend up. Usually when you jump in here, you're like, look, it's been trending all day. Okay, poor high. Normally we get a push away from the poor high, so that should backfill those single prints. Mackie Max. She doesn't know what she's missing, man. It's exciting stuff over here. Am I adding indicators manually? Do you mean these lines? I just put those in myself. Like this 100 daily is not, I just punched that in this morning where it was. That's not like the exact level that it's at. Really what's more important is this like note of volume right here than the exactness of that level. Okay, again, breaking through on very thin volume. Just a little short squeeze. Now they got to pull back down and prove it to us. They do have the ticks trending higher above zero. $77 contracts definitely needs to backfill. I was about to say, Donkey, yeah, you can always get right back in. If it's going to find support, it won't pull lower. It'll come back in here and it'll start to build volume in here and it won't go any lower. Ticks look good. Rocket. Congratulations, brother. We'll see you next week. Enjoy your weekend. TGIF. 100% TP. You just nailed it on the head. I put those little arrows there as a reminder to everybody. Don't FOMO in just yet. Those areas need to backfill, and that's where we'll find out if the volume's coming in. Now, of course, the one exception would be if we start to turn these candles pink. I mean, anywhere above the breakout level could bring in new buyers, but that seems very, very unlikely with this very thin volume here. So this is where you're looking to go long. If they get back down into this and they start to get those pink candles. But the ticks look good. The buyers are stepping in. It's just not very many of them. FOMO time. Time to FOMO. It's going to the moon. If I don't get in now, I never will. If I'm a bear, should I get lubed up just in case? Yeah, I wouldn't short this. I would short it if it breaks back below the 100, but I would not be short now. So far, they've given us every indication that they can maintain this higher price. TP is half back from yesterday resistance. Not really. I wouldn't say so. Yeah, Jonathan, I can see that a little bit higher, 26 at the base of the single prints there. You're regretting taking those profits? You can blame me. I didn't think they were going to push this high on a short squeeze. Yeah, but that's the thing. A lot of people didn't buy. Look at the volume in this whole area. It's paper thin. So they weren't buying there, not yet. That's what the pullback is for. This is a short covering rally. It's the same as a liquidation break. The further it pushes up, the further it pushes because the more and more people exit their shorts. But they haven't proven that new buyers are stepping in just yet. Okay, they repaired that weekend period high from yesterday. Man, the higher and higher they push, the higher and higher they push. So just like a liquidation break, this is one of those things that can retrace very quickly. So I'm not going to let it get me into a FOMO trade. Yeah, we have that expression here too, Jonathan. The proof is in the pudding, is what we say. Ah, beat you to it. The breaths and the advancers versus decliners look great. They look bullish, but the ticks are getting weaker. The pudding in the pudding. Here, drink this. Okay, so they're getting close to turning one of these candlesticks pink. They only got to get to 4,000 contracts, so they're very close. But if this breaks, they're pulling back down lower. Shalom, yeah. The difference between the white is the lowest 30% of the volume. So that's out of all the volume that's traded today. The white is the lowest 30%. The pink is the middle 40%. And then the red is the highest 30%. So they're doing it. They're bringing in the pink candles. The buyers are stepping in up here. They're keeping the ticks above the zero line. So now as the market starts to pull back and backfill some of these low volume nodes, this gives new buyers a chance to start piling on. So we look for support in here, which is buyable for the breakout. Cotton dog week high in the I period, same as 930 week high in K, same as 929 low of the day. I'll give it to you. I wouldn't consider it weak because of this, but I will because of that there. So it's a poor high. We expect to push away from a poor high. Okay, J period printing leaves a lot of single prints from the I period. Once again, as always, increasing the odds. The market needs to backfill those. You add the low volume to that, even slighter odds. So if it were to start pushing higher here, which it can, they've started to bring in the volume. The ticks are still pushing their way higher, staying above the zero line. So if it does continue from here, that would be a when what should happen doesn't. That is extremely bullish for continuation. But still, in my mind, increases the odds we got further pullback. I am very reluctantly changing my banner to say bullish because it feels, my spidey senses are telling me we need a further pullback, but I can't ignore the market generated information. The ticks are continuing to push higher. Every time they start to pull down towards the zero line, they get bought right back up. We're bringing in volume here at this higher price. So I think they've got another push up ahead of them. Plus, obviously, a poor high to repair. I am convinced, though, that at some point today, we're going to come back down here to backfill this. It's too exact. Breaking out on super low volume right at the 100 daily. That needs backfilling. Okay, second poor high. Okay, poor high repaired. Next resistance is going to be right about 43.48. We've got this little node from yesterday and from the day before, right in the same place. So should be some sellers in there. Donkey, I'll only give you that if you'd have reminded us of that down at the lows today. You don't get to say that up here. But if when that poor low was created in the C period, you brought it up, I'd go, hell yeah, bro. Mad props. Pop over and take a look at the NASDAQ. How's it looking? Week H period low left behind there. Week G and H low. And I low. Oh boy. Just like the ES has all that weakness in the single prints, all these references are weak up to the J low. Blue Ocean, no, it has not come back down. And that is what is interesting to me, right? So anytime you have something that is a high probability thing of happening, so the first high probability of it coming down was the low volume that we had right here. Add on to that the fact that it spent no time at all. It just literally, it literally spent 2 seconds in here pushing higher. So both of those things were a high probability it was going to pull back down. Then when the J period printed and left these single prints behind here, that added to the probability that it was going to pull back down. But then I just sat and watched the ticks. The ticks were going to tell me the story. And every time they tried to pull below that zero line, they got pushed right back up. So that suddenly becomes a when what should happen doesn't. It should have pulled back down, but it didn't. So that becomes a signal in the opposite direction. And that's when I got bullish in here. But I'm unimpressed with the follow through. So I still think at some point today, these buyers will run out. They may have another big push ahead of them higher, and then we come back down and backfill. Maybe in the M period. Justin says maybe the murder bot sends this reeling at 350. It could be. Never say never. Just more and more of these feel like laggard FOMO buyers. So I'll give them one more push up. I think they've got it, but I don't know how much further than that. Let's see what happens when they start getting into this resistance. Donkey calling for a new all-time high next week. No mo to the FOMO? Are you asking if there's no more people to FOMO? No, there's more. Oh, yeah. The laggards can keep it going for a shockingly long time. Do we still have a poor high at 55 from 923? I think so. Still have a gap. Yes, sir. Yes, ma'am. Sorry. Got that poor high in need of repair. And the all-time high is weak as well. Got another poor high. That's oh, my trend line alarm just went off. We're pushing up into that trend line, coming down over the last few days. But yeah, so like 3 poor highs and an all-time high, which is weak because it was created in the overnight. And a gap. So a little resistance here probably as well in this trend line coming down over the last few days. We can look at that as potential support resistance as well. If they get above it, come back down, it could act as support, or it could act as resistance that causes a little pullback. What's wrong with the NQ? It looks like it's pushing. Oh, just not that much. I mean, it's such a tight range. It has been for days. NQ got no legs. Jonathan feels like it wants to dump. Not quite yet. We'll see it in the ticks. We'll see that one big red tick, and then we'll know it's done. Yeah, there must be some rotation out of tech going on for the fact that the ES has such enormous ranges and the NQ's been so tight. People must be selling their tech stocks to buy into other stuff. They started pushing when they came back from lunch. I don't know. To me, this doesn't seem like institution. This seems like retail. Ram V, another bull trap? I don't think so. Like I said, I think it needs a pullback because of the way it pushed higher. It pushed higher on super thin volume. It did not spend enough time backfilling in here. But I don't know that it's a trap if they stay above that 100 and daily. Who knows, man? This market loves a V shape. Man, when you look at the daily candles, it really could go either way. But that is a nice big wick below us. You could see it being just a bounce to continue lower, but you could also see it as that was the pullback the market needed. This wasn't enough, coming down to the same level as the last time, but maybe that was. Definitely got to close above the 100 though. There's also this other trend line. We might push up to that and then fail. That one there. Boom. Boom, 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 boom. Boom, 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 boom. Oh boy, another set of single prints. So Charles, what does it mean if you just keep seeing single prints after single prints after single prints? It means FOMO. It means this stuff does need to get backfilled sooner or later. I love that analogy design, Knob, about the single prints. It means the ice is getting thinner and thinner. We're getting further and further from the shoreline. Yes, sir. Market is going Whitney Houston, so emotional. Is she particularly emotional? Well, they're holding up the ticks. Waiting for that one big red tick. Another poor high in need of repair. Charles, you keep saying poor high. We've had like 4 fucking poor highs today. Yep. Short-term traders. A sign that it's not the bigger players. Fair enough, Cotton Dog. Da-dum. So this tick's starting to get a little bit below zero line. That's fine as long as they wick it right back up. But if it continues, it means the FOMO is coming to an end.
Spartan in like the heat of battle. He rips off his armor, he defeats all these guys like one-on-one. It's like the bravest thing that anyone had ever seen. But the Spartan elders, when he gets back
Damn it. You look away from the chart for 1 minute and you get your big red candle. Your big red tick. So as always, they can wick it back up, meaning they just instantly pull it back up and it goes green again. But odds are that was the end of the push, repairing that last little pour high. Now they need to pull it back down into support, back into these candles, looking for support there. Just below the base of these J period single prints. If they can't find that support, pull it back down towards the base of the I period single prints, looking for support there. ASDF called it perfectly. I don't know yet, man. Might have been wrong. Again, in a when what should happen doesn't, getting our big red tick should have at the very least caused the market to backfill these single prints to the J period. But instead, more FOMO buyers are stepping in once again. So I might have been early. Might have been early. 10-day, 30-minute POC. I don't look at that. I'm not familiar with what that is. But yeah, it looks like retail, volume low, but still pushing up. Maybe just not strong sellers. Yeah, or they just haven't given up yet, right? That's the thing about FOMO, is that they can push it. They can shock you with how far and how long they can just keep pushing it. Jim Dalton uses the expressions, traders will do what works until it doesn't. So ever since this major push up here, every dip's been bought, and it just keeps going higher. So they just bought this dip too. But if they fail to get it higher, they'll give up, and then you get the pullback. Okay, second short squeeze right there. That was the shorts that were piling on in here. Getting another push up. I always hate when stuff like this happens, when I know there are people that are new to the channel and new to the profile watching, and they just think like, oh, well, the profile doesn't work. Look at all those weak references they've left behind. 3 sets of single prints. And they just keep pushing on super thin volume. This must not matter. It will, guys. The short-term FOMO traders, who we call laggard traders, who step in at the end of the day, at the end of a big move, they can push the market remarkably far. But it always retraces. Sooner or later. This is literally what we're seeing right now, is an exact repeat of what we got here. It's a short covering rally. But good for the bulls, man. They completely recovered it. So now we'll watch for the same thing we got here, where they got the big push higher and then they built the volume up at the higher prices without retracing it. Can they do that again? TP disappointed today. Rotational day is not working. Yeah, I mean, the rotational day did not work today. But if you'll give me credit, I did say it at the time. I did say today is not a good day for rotation. It's more likely to break out. And since it broke out, it's continued higher all day, right? Actually, we had a bit of rotation up here in the breakout. But once it got a good clean breakout, it's continued higher. So that's the important thing of when the day goes rotational, look where the high is. If the market's able to get above there and then bring in volume at the high, it doesn't need to rotate anymore. It can just continue higher. Who is saying we are tired of these weak ass lows? These weak lows all week. You saying the FOMO buyers? David, any clue as to why buyers are FOMO versus more substantial buyers? If you're asking me like why I read it that way, it's because of the volume. It's because of how thin the volume is, right? There's very, very few people who are moving the market right now. It's not taking very many contracts to keep pushing it higher. So that just means that there's nobody shorting the market. But that also means there's not massive size coming in and buying it either. Another set of single prints. So that tells me that it's just smaller traders who are doing this push. And smaller traders, right? Short-term traders, retail, they trade off of emotion. So the idea is somebody that's buying up in here, they're not buying because something, some new piece of information just came out. They just got some signal that the market's worth so much more than it was earlier this morning. They're literally just buying because they're watching the price go higher and they're scared to miss the move. That's not how larger institutional players do it. They have a reason to buy. So this is one of those things where it's annoying. I get it from you guys' standpoint to say this now, because obviously I didn't know earlier in the day. But the assumption is that this buying down here would have been institutional. That the bigger players would have known that they were going to break that 100 daily. And so they stepped in here. That would have been where they entered. Hence why we had such a strange grind at this point. In particular, if you remember, I brought it up at the time. What was weird to me was that this node broke, but yet we didn't get a bigger pullback. The POC was like all the way down here at the time. With that node of support breaking, we should have had a massive pullback. And now if I had to guess after the fact, in hindsight, I assume it's because bigger players were layered in like that. So they ate that up. But they're not the ones doing business way up here. Up here, the people buying in here that are giving us these pushes. So the people that bought this and the people that bought this, that's short-term traders. And they're just buying because of the push. That's a great point, Donkey. A lot of it's probably short covering too. I imagine a lot of this move was short covering and a lot of this move was short covering. Cotton Dog, could you think of FOMOers as first movers? Sometimes that can happen, right? Sometimes the FOMO pushes the market. It like causes a change in the market, and then the market doesn't need to retrace it. But I don't think so. Not in this case. How many of these people who are long right now are going to hold these contracts through the weekend? How many of them have a big enough account size that they can hold these contracts through the weekend? Blue Ocean, you got to be short biased. Man, you have not been listening today at all, brother. If you think I'm short biased. I am patterns in the market that happen over and over biased. I was short biased in the morning, right? And I stayed biased because of the poor low into the beginning of the rotational day, right? But then as soon as we broke out above the A period high, I changed my tune. And I said the next thing is the test of the 100 daily. So we did it. We tested it. We busted right through. And then I was probability biased, right? That the probability of leaving this many single prints behind is very, very low. It just doesn't really happen that often. It can happen, but it happens, 1 out of 50 times or whatever. So it's still the highest probability that it needs to be backfilled. And then as soon as I saw the volume coming in, I went bullish and said they're going to push it. They're going to continue. I mean, I'm just going with what the market generated information is telling me. It's a combination of what I'm seeing in the charts and my experience. But I don't care if they keep pushing it. I'm flat. They can push it as far as they want. I just know from years of trading that when you buy shit like this, you get eaten alive. At some point, the buyers will run out. At some point, this tick will fall and stay down here below the zero line. And when it does, the market will retrace very quickly. And a lot of these buyers who are unexperienced trading on emotion will get emotional and exit those trades at a loss. So I'm just here to say you don't have to take the trade. But if you're long biased, jump in, brother. Get long right now at the top. Cotton dog, that is certainly a possibility. Remember, anybody that holds a contract over the weekend is actually taking more risk, right? If you hold a contract overnight, there's only, 12 hours where the market could go against you. But if you hold the contract over the weekend, there's, 2.5 days-ish of time that the market could go against you. So you have to have even stronger hands to hold long contracts over the weekend. Correct. Mr. Grutonks, the 100 daily average is the simple moving average on the daily chart. Buy high, sell higher. Am I right? Yeah, if you're right that it's going to go higher, for sure. That's something that, what's his name, in Reminiscence of a Stock Operator talks about. That it will always push higher than you think, and you want to be buying even at the highs. Rich, it's called window trader. Window spelled without a W at the end. Jesse Livermore, that's it. Amazing Microsoft didn't go after Window Trader. Window Trader's a tiny little company, man. They're not even on Microsoft's radar. I'm surprised that somebody like, TD Ameritrade hasn't bought them. Probably will one day. Well, TD Ameritrade didn't get bought. They um, merged with Charles Schwab. I know. It's crazy, isn't it, Diane? The market will do what the market will do. Jay, well, that's just because I'm late to the party. It should say bullish. I just don't want to switch to bullish now and then you get the pullback. You can visually see what I'm talking about. Do you see how the candlesticks are getting thinner and thinner and thinner on the way up? There's less and less buying happening. At some point, it runs out. Auctions don't go up forever. Eventually, somebody's the last schmuck willing to pay this price, and then it drops like a brick. So if you believe in this, if you're saying to yourself, "Oh my God, this market is worth so much money now than it was 2 hours ago," oh, it's just so much more valuable, then buy it. But I don't think so. The value for the day is all the way down here. The fairest price to do business is all the way down here. This is not my opinion. This is market-generated information. The people who are buying right now are overpaying like a motherfucker. The pink volume is the middle 40% for the day. White is the bottom 30. Arthur, should we short now? No, we haven't got a signal to short yet. A big red tick would be a signal to short. Or clear resistance if they keep poking at a certain price and they can't get any higher. But up till now, they've been buying every dip. So there's no reason why they won't buy this one. All right, there's our big red tick. If they can keep it down there, that's the end of the buying. If they wick it right back up, they can keep it going. So first target to the downside is the base of the K single prints at 43.4875. And then on down the line, each set of single prints till we get back to that 100 daily simple. Nope, they wicked it back up. They're buying every dip. Man. Yeah, it's a great point, Donkey. That could definitely act as support now. At, looks like 43.45-ish, 43.46-ish. I will say, with them pushing it this far up, it does make the daily candle look like it's a good bounce. All right, can they hold on to this little node of volume that we're in here? Because if that breaks, more and more of these longs that bought for emotional reasons, not because the market was worth it, they'll get squeezed out and we'll start back tracing. Down and down we go. Very quickly and with a vengeance. When the levee breaks, exactly. The water just comes rushing in. They're not supposed to do that. There's like a setting where I have to click to give them permission to show ads during the stream. That's fucked up. I'm going to have a talk with YouTube. Herman. Do you ever just imagine a single engine plane on fire going down with a high pitched whine getting louder and louder as it drops? I never have until now. Oh, they're getting squeezed. They're like, I don't understand. I'm buying the dip. I keep buying it. There's just not enough of you, FOMO buyers. You guys see that the day is almost done and you can't hold those contracts overnight. Well, James, you just let me know what sound effects you want, and I'll do them with my mouth. Boop. Wah, 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 wah. All right, Donkey bringing in our first guess for the day. For those of you that are new to the channel, for fun, just for fun, we like to make a guess a half an hour before the market closes for what price it's going to close at. Donkey seeing 43.50, so basically just a little lower than we are now. If I had to make my guess, I'm going to say somewhere in the single prints here. So I'm going to go with like 4,333. That's where I think. So go ahead, hit me up in the chat. No one's going to judge you if you're wrong. Where do you think the market's going to close today? Cotton Dog for 43.30. So he's seeing a pullback to the base of those eyes single prints. RK seeing 43.03. She sees a real pullback. Back down into value. Whew, that would hurt a lot of people. Cotton Dog, also seeing 43. Oh, I just read that one, sorry. Design Knob is seeing 66. A Bull, as always. Nicholas is seeing 70, 75. You mean 75 points from here? That's very high. Brian seeing 43, 47. So just a little lower than we are now. Jang is seeing 25. So pull back down towards the base of those single prints. A little bit below that 100 daily. Nicholas says we're due for a short squeeze. A short squeeze? Don't you mean a long liquidation? Shorts have been getting squeezed all afternoon. Chris Yee, 43.39. So another person just sees a small pullback here. TP, it's more fun if we close below 42.88. Fun for who? Herman is seeing 47.50. So just right about a little bit lower than we are now. Am Gossel seeing 36. Casey seeing 29. Malcolm also seeing 29. Jamie seeing 24. So a lot of people expecting us to get back below that 100 or right around it. I would think at this point it would act as support, but we'll see when we get down there. Bull Bear, this is too much information. I just need a number. All right, Nicholas is seeing 75. He really does see a short squeeze. I don't know what shorts you think are left to get squeezed here. Zeb, 43.21. Another person seeing a big pullback. Scott seeing 50. So just literally right where we are now. Shalom is seeing 52. So again, just a little bit higher than we are now. Yeah, unfortunately, with this many people guessing lower prices, that's probably not going to happen. That's been our track record. If a majority of people see it going lower, it doesn't. D is seeing 36 as well, right about where I'm seeing. Jonathan seeing another push up towards the high there at 66. Vincent's 53. Another person thinks we're going to end right around here. Mackie Max is seeing a 60 push. Arthur seeing 35. Who will be right? Who will be wrong? Whose face is the murder bot gonna eat? I got respect for these dip buyers, though. They don't quit. They got tiny numbers, but they're like the little engine that could. Zabacy in 2150. Herman, it's going to be the little engine that ran out of coal and rolled back down the hill. Uh, that's not negative, Herman. It's totally fair. Design knob, you're early, bro. We're like 20 minutes from the, I guess we're 10 minutes from it. Well, thus far, this is an uneventful M period. Hopefully, the murder bot brings in some excitement. At this point, I don't care which direction. Another sign that the market is overbought is when you see this big of a gap between this 20 moving average and the price on the 15-minute candles. Often, if we're going to get acceptance of the higher prices by the end of the day, the 20 will have kind of pulled up much closer. So that's another thing that just caught my eye. Here we go. Stairs up, elevator down. 10 minutes to Murderbot. Hello, Theta, my old friend. I've come to fuck with you again. Give me money as the time passes. We love you too. ASDF, do I look for divergences on the ticks? Like a divergence between what's happening on the ticks and what's happening with price? I don't really look for it, but if something funky was happening, it would stand out to me. It doesn't normally happen with the ticks, but you get that sometimes with the other two, with the breadth and the advancers versus decliners, where, like, for example, they'll be slowly working their way higher while price is working its way lower. And sometimes, honestly, I just kind of ignore it when I see it, because it's like I just kind of ignore the internals and focus on the price. But it's not like RSI divergences. Or MACD. Yeah, Erman, that's exactly how I felt about taking classes with Jim Dalton. I listened to Peter Resnicek talk about him for years, and I never took any classes because they all cost like $1,000. And then I realized I lose $1,000 all the time. Why don't I just pay for the class? Man, I am truly impressed that they're holding up this price. Particularly, they haven't even backfilled those couple of single prints. Every time they dip, they buy it back up. It's in the hands of the Murderbot now. 6 minutes. Opinions on ETH, everyone? Well, I haven't looked at it. Bitcoin's doing great today. Ooh, yeah. It's almost identical to Bitcoin with its shape. But yeah, they broke the downtrend line today, and they've been buying ever since. So it looks good to me for continuation higher. And of course, I love Ether as a long-term investment. I think it's very nice. I like very much. less fuel. Do I hold my trades at 350? Very rarely. Very, very rarely do I trade during the murder bot. It's just too random for me. I get that there's a lot of opportunity to make money. If you catch it in the right direction, sometimes there's a lot of money to be made. And I feel FOMO every time I miss it, but it just moves too quick and too random. Okay, first set of single prints have been backfilled. Next target is the J period, where there's still 2 single prints that need backfilling. And then we head on down to the I period if they don't find support there. Oh, it's not murder box, it's bot, B-O-T, like it's algorithms is what we're calling it. Bot obviously means, like robot, but it just sounds better than murder algo. Yeah, I've read Mind Over Markets. Murder box sounds cool though. Yeah, there's a great Richard Kelly movie where there's like a murder box. It's like you get like a box that arrives at your door, and if you push the button, you get like $1 million, but somebody somewhere in the world that you don't know dies or something like that. It's great. Once again, they bought the dip. Came so close to backfilling those single prints, and they didn't. Very interesting. Any good tips on how to get through it? I mean, why are you having a hard time with it? Is it too dense or like too boring? No, I haven't seen Brass Teapot. Yeah, it's sci-fi. If you want another great movie by him, Southland Tales is another awesome one. And of course, Donnie Darko. Yeah, The Box, that's what it's called. Yeah, I never learned well. I'm dyslexic, so I don't learn well from reading anyway. I prefer to take books on by listening to them in audiobook, but of course those aren't available in audiobook. All right, there's the murder bot. First push is higher. Yeah, that sounds intense. Yeah, James, that's another great advice. If you just take a course with Jim Dalton, then the books will be much easier to understand. Well, the Murderbot is bringing in volume at a higher price. That's a sign of acceptance of higher prices. But what are they doing behind the dumpster, Donkey? What do people do behind dumpsters behind Wendy's? How are they getting paid? All right, Murderbot bringing in the volume. Yeah, happy to share. Sorry, I didn't call this massive push higher. I did not think we could maintain this. But what the Murderbot buys, it will hold over the weekend. So the question becomes, on Sunday, do the overnight traders keep it up in here? If they can, we can continue higher tomorrow or Monday. Five for five deal? I don't think you know the kind of work that he's referring to. But of course, you're referring to the food. Diane, you're expecting a massive push higher right here. Second Murderbot in 1 minute. If you're going to get it, you'll get it then. But I think it's just bringing in volume to show acceptance of these higher prices. I don't think it's really going anywhere. What is that, James? I have no idea what that is. Okay, second Murderbot. Kicking in. Bringing in some volume. So the way Jim Dalton teaches it, price advertises. Price just pushes up and down to convince you to get into trades. time regulates. So the more time you spend in a certain area, the higher the probability that that's a strong, area. And then volume measures, right? So from the point that we broke out from this morning's range, we've spent most of the time up in this area up here that we're currently in, and we're now bringing in volume. So volume is measuring that this was a successful move higher. To my shock and awe. If you guys have enjoyed spending this day hanging out with me, there is a link in the description to join the Brigade. It only costs $10 a month. And we can hang out like this all the time. And of course, we'll be back to those private streams come Monday. So I hope you guys join over the weekend. If not, hit that subscribe button. And we'll see you here for the first hour of trade. Yeah, stop yelling at me, donkey. Same to you. Enjoy the weekend. Party hardy. Make the most of it. All right, second set of single prints repaired. One more to go just below. Although it doesn't look like we're going to get there. I'm afraid, James, that statement does not help me at all. I think I'm more confused now. Well, there you go. Anyone that picked 47, 46.75 as their closing price, you were right. I was wrong. They did bring in volume at higher prices, so that is a sign of acceptance. And we have a double distribution day. Triple distribution, technically. However, it's worth noting value was still overlapping to lower for today. So that increases the odds of either sideways or pullback moving forward. So let's see where we open on Monday. Thank you all kindly. Truly appreciate you. Appreciate those likes. And I look forward to seeing you all here next week. Bye-bye.